Hello everyone, I hope you're having a great week so far. Today I will be sharing the second half of the interview with Anmol Sin, a professional trader and founder of LiveTraders.com that I am sure will give you great insights of the market in 2024 and beyond. If you have not had the chance to watch the first half of the interview, please make sure you check part 1 so that you don't miss any of the outlooks and insights that Anmol has shared regarding the trend of the market and what may be coming in 2024. So with that, let's see what Anmol had to say about this year's market. Now before getting into the interview, I just wanted to share that Moomoo is having an amazing promotion, giving out 15 free stocks and also giving out a total of 8.1% annual interest rate for the first 3 months as you open an account, and then from month 4 giving out 5.1%, which is better than most of the saving accounts that are out there. So if you are interested in receiving 15 free stocks and receiving an annual rate of 8.1% on your cash portion for the first 3 months and then 5.1% for the remaining time, make sure you click the link in the description below. So then I think I think it's generally known that the market has like 4 steps. And the market right now, a lot of people are thinking that the recession, step 4 has been done and we're on a new bull market rally. But personally, do you think that we are still in maybe the stage 3 and waiting for the major crash to come, or do you think that in 2022 we had that crash and we're actually having a nice recovery?
Yeah, so it depends on what time frame you're looking at. If you're looking at the daily chart, then yes, the correction was already done, right? We came right back up. This is the beginning of a new trend. However, when we take a look at the monthly time frame or the higher time frame, then this is still stage 2, potentially entering 3, but there's no signs of a stage 3 just yet. It's still in a stage 2. Now, it could be near the top of the stage 2, but it's somewhere still in the uptrend at the moment. And typically, the signs to look out for is when you get a big green day on extremely high volume, that usually will signal exhaustion, and then that's the end of the move. Or typically, when you start the move with, let's say, you start moving up rapidly, and one day you get a decent sized gap down, below all of that, that usually starts the downturn as well. So right now we haven't gotten those signs, so I wouldn't be overly bearish right now. I think the key thing to look out for right now is just looking at the moving averages and seeing if we can hold that or not. 50M is a good signal at the moment, but right now I'm not seeing any indication of like a major decline. Sure, there's going to be pullbacks along the way. We're extended, but that doesn't mean that we're not going to go back up.
And based on your experience in the market, I know that in the .com, the great financial crisis, before the major crash came, it was like a euphoria stage where there was what we call like a melt up. Do you think that we are kind of getting close to that phase where a lot of people are getting FOMO and getting to the market and starting to see this melt up by any chance?
We're starting to see the beginnings of it, but we're not there yet. Like you will know it when we're there. Like like when right before the crash, we had the whole GME AMC thing, right? Right before the decline. So that was kind of the euphoria moment at its peak. And then before that, in 2020, we had the whole NFT craze, the digital boats and digital houses people are buying, all that stuff going on, images of gorillas people are buying. And that was kind of the hype of the move in 2020. So I think this time we're starting to see the beginnings of it, but it's not there yet. We haven't seen any crazy euphoria. Now, the Bitcoin ETF, some people could say that was kind of a dud. Maybe that was signaling the top of the euphoria. But no, I think real euphoria, you'll see it. Like you'll know it when it's happening, right? Like we all knew during GameStop AMC that this isn't going to last. So I think there's going to be something like that shows up. Now, what might that be? Again, time will tell. But it's also possible we don't always have to get the euphoria, right? Maybe we start getting straight into a fear mode. Maybe we get a black swan event, some sort of a news, something to do with China or a new disease coming in, right? And that could just spark the market downturn just like that, just like it did in 2020. So I think, just something to keep an eye out on.
Investors like Warren Buffett say, buy and hold forever. For average investors, you should actually buy an index rather than pick an individual stock. And was wondering if you were on the same page with Warren on, it's more profitable to just invest in index or keep dollar cost averaging than buying and selling.
Yeah, so it depends on what kind of person you are. So if you're the average person, you already have another business, you have another job, you don't really know too much about the stock market, you haven't studied, you haven't learned, then you don't have anything to do with the markets. In that case, yes, you should not try to pick stocks because you haven't studied it, you don't know what you're doing. Just put the money in the market and you'll be more than happy. For the average person, that's the best thing. Why? Because you're buying a basket of stocks, so you don't have your bucket and all of your money in one stock or something. B, you're not making bad decisions, or you're not speculating on random stocks, because in S&P and Nasdaq you're gonna have the big companies. And C, you only got one thing to look at, S&P, right, or the QQQ. So you don't have to have all that mental energy, which also makes it easier because of lower fees, less commissions, right? It's easy to dollar cost average one position. So I think for most people that's the best approach. Now I say that for most people who are not involved in the markets, but if you're somebody who's studying the markets, you're involved in the markets, you know something about it, technical analysis, you study this art, then for you, yeah, I don't believe you should just buy and hold. I think that's ridiculous, because that's what average person does. It's good for the average person, but if you're really spending time learning it, you better be getting better returns. Otherwise, why you might as well not study anything and just buy the stock market, right? So I think for most people, I don't think it's a good approach, the ones who've studied. Now, Warren Buffett, I mean, he doesn't buy and hold forever. He gets in and out too. If you look at his ETFs, there's always new positions, something he's exiting. So it's not forever. Just like with any investment, you have to know your exit plan. You need to know what your plan is. And that's why S&P and NASDAQ is recommended, because you're not picking a stock. So yeah, you can hold forever, right? But if you're picking a stock, then you need to learn how to take profits along the way, because stocks don't always come back. You have to learn how to take profits, especially when you get those extreme moves.
During 2023, so last year, the top 7 to 10 tech stocks have done very well. And I think they kind of raised the market. And I do understand that there is a cycle of money that transfers from sector to sectors based on whether it's overvalued or undervalued, and was wondering if you think the institutions will still keep buying the tech stocks in 2024, or if you see a sector that's undervalued and you think that the smart money will come into that sector in this year.
Yeah, you're absolutely right with that. I mean, majority of the market rally is driven by the major stocks: Meta, Microsoft, Google, Apple, all these things coming back up. So that also is a warning sign, because what if they start to slow down, right? What caused the market to go up will also cause the market to go down. And typically when things go down, they go faster than how much they took time to go up. So I think that's definitely a risk factor there. As far as sectors, I think what's happening is also a flight to safety. That's why smaller cap stocks haven't really been performing that well, and they're not really getting those buyers in. That shows that people don't want to take too much risk. So they want to keep money in the safe stocks. Because see, hedge funds don't have the luxury that you and I have. You and I could get in and out all day, right? Doesn't matter. Hedge funds don't have the luxury to get in and out all day, so they can't just go all cash. They have to have positions. So for them, it's safer to hold on to stuff like Apple, Microsoft, Google, because their companies are not going anywhere. So they use that as almost like cash, just to park your money. And that's what caused it to go up, which shows to me that the funds are getting a risk averse. They don't want to take the risk buying smaller cap stocks or random stocks. They're putting money in the safe stuff that they can just put it and forget about it. And even if the market crashes, it's fine. They're going to come right back up after a few years. So I think that's kind of what we're looking at. But as a sector, I think Tesla has been underperforming this year. I think that might be an outperformer over the next few years, just purely based on majority of the hedge funds still don't own Tesla, and the ones that own Tesla are actually underweight Tesla. So when they finally realize that they need to have some Tesla, I think that alone, there's not enough of a float. So I think Tesla is going to be an outperformer, probably, if not this year, then definitely next year, but probably towards the later half of this year.
I'm really curious to hear if you are also invested in the cryptocurrency or Bitcoin space. And I know that, again, investors like Warren Buffett say that Bitcoin is a scam. It's eventually going to go to $0, whereas, Cathie Wood or Bill Ackman is very positive on the cryptocurrencies and think they will stay here for the future. But I'm really curious to hear whether you are invested in the crypto space and what you think about the whole crypto hype that's going on right now.
Crypto obviously here to stay. It's not going anywhere. It's almost like the early stages of the internet, right? So in the early stages of the internet, during the dot-com bubble, any company that had .com or internet company, the stocks were ripping. And that's what happened with crypto. Dogecoin, Shiba Coin, like random stuff that doesn't do anything. Everything went up. So just like everything went up in the dot-com bubble. But then what happened? In .com, we got a crash. Everything crashed, right? But then after the crash came a few winners. Apple, Microsoft, Google's, right? They stuck around, whereas 90% of the companies went bust and they don't exist anymore. So that's what's going to happen in the crypto space, is that, we got all the companies moving and shaking, then the random coins come in, a lot of scams come in, and as we see, companies shut down, FTX, all that stuff happens, and then but out of this crypto winter are going to come out a few winners that are going to be the next big thing, that are going to be here to stay. So it's kind of like the early stages of internet. Now, using that analogy, I think Bitcoin is kind of like the AOL of the internet stages. It was the first one. It was a great idea, But it's old technology. It's outdated technology. There's better and faster technology now that exists in other cryptocurrencies like Algorand. So those have much more of a utility. And recently, BlackRock CEO Larry Flink, as well as Jamie Dimon, JP Morgan CEO, said the same thing. They think also, which I agree with, and I talked about it before they did, is that the technology of blockchain is here to stay. That is where the money's at. The technology, not in the currency aspect. Cryptocurrencies are never going to be a thing. So currency is not the right word. It's the technology, and that's what it really is. Bitcoin is too slow. It's too clunky. It's too expensive to ever scale as something that's going to power the financial systems of the world. I mean, if I send you Bitcoin, it might take you 30 minutes to fully confirm the transaction. That's ridiculous, right? I mean, I could Zelle you right now. It's confirmed. So I think there's no need for Bitcoin. Whereas other currencies, as I said, like Algorand, they just lowered their time to 2.8 seconds. So 2.8 seconds versus 15, 30 minutes on Bitcoin or Ethereum, and extremely low cost, because low cost is important for institutions because they're doing trillions of dollars of money's moving around. They're not want to pay, like billions in fees. They're not going to do that. So I think that's why a lower cost crypto is important. Faster crypto is important. Something that is instant finality. Something that the coins can actually be accounted for, unlike Bitcoin, where we don't know half of it, who's Satoshi, where it exists. It's not going to ever work. So I agree with Warren Buffett and all those people that eventually, when everybody's done buying and there's no more buyers left and there's no utility for it, yes, prices will come exactly back down. But again, as we said, markets can stay irrational longer than you can stay solvent. So yeah, I do think Bitcoin's going to have one more run up. It's going to have that one more run up, but probably going to be that final run up, and then eventually, like all bubbles, everything bursts at some point.
My last question before I wrap up the interview is, I think there's a lot of people who are more on the first stage of investing, like beginners or those who came in after the COVID bull rally. But what kind of advice would you give to people who are starting to invest in the market or who are starting to trade based on the chart analysis?
Yeah, I think first thing I would just tell them is to take it easy. Take it slow. All right. If you want to trade for a living, don't trade like you got to retire next week. Start to build your skill first. It's just like any other thing. If you can't just watch a video on golf and then go out to the golf course and play really well, right? So just like that in trading, you can't just watch a YouTube video and say, okay, now I'm going to be a trader. Like you got to learn, right? Because trading, you're competing with other people. When you're buying a stock, somebody's selling it to you, right? So they think it's going to go down, they're selling it. You think it's going to go up, you're buying it. So who's right? So it's a competition. So if you're going to compete with the marketplace with other traders like me, then you need to know what you're doing. So I think step one is to get educated, right? Really know your stuff, have a trading plan, right? Make sure you know your odds, make sure you know your statistics, make sure you're journaling your trades, keeping a track of everything. And just like a business person, when you get into business as a business plan, you need to have a trading plan. You need to know when you're going to get in, where you're going to get out if you're right? And where you're going to get out if you're wrong, if the stock is going down. Those are the three important things every trader needs. Secondly, I would just say practice. Right? There's demo accounts these days, virtual accounts. Practice, take as much time as it needs. Don't be in a hurry to go live, right? Take as much time as you need, because guess what? If you can't even make money on a demo account, you're not going to make money on a real account. So start getting consistently profitable there first, and then work your way up. Start with small amounts of money and you stair step your way up. A lot of people want to go from here to here because they've been reading too much Twitter and Reddit. So they just want to become a millionaire overnight buying this random penny stock. But what you need to do is you need to be slowly build the account, almost like an equity curve that you don't even notice. And in the first few years, it's going to feel like, but I'm not really making progress. I'm not really growing my account. Should I really do this? Trust me, after like year 3, year 4, year 5, the compounding really starts to kick in. And I think that equity curve is sustainable, whereas traders who usually go like this also come back down like that.
Thank you very much. I think we covered a lot of topics today, and I think it was really helpful. And, for me, it was really helpful. I learned a lot. So again, I want to thank you very much, Emil, and see how the market plays out in 2024. And we'd love to have you as a guest again in the mid half of this year. So thank you very much.
Yeah, sure thing. Thanks for having me.